Hi, I'm Jim Jubak, and welcome to my YouTube video for March 15th. It's torturing me. I don't mean the stock market, I mean the weather. We're 2.5 weeks away from the start of baseball season, and it's snowing here in New York. It's supposed to snow all day. They said flurries, it looks a little harder than flurries, and it's just basically going, you thought it was spring, and it's not. Okay. So if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we do the next one. We're doing about 3 a week, but not always on the same day. We'd like to keep it a little tricky. You can get more of me on my free site. That's jubakpicks.com. It's got 3 portfolios, a couple of posts a day. Or my paid site, jubakam.com, which has got 6 portfolios and some options, which is a very interesting play right now. So subscribe. You'll find links to all those down below. Okay, today's topic, the Fed's impending disaster. Okay, on Tuesday, we got the CPI readings, that's the Consumer Price Index, inflation numbers for February. And on one level, it looked better. The annual rate of increase in inflation for all items, that's the headline number, 6% annual. Core, 5.5% annual. The problem is that inflation, while not going up, is not coming down very fast. And in fact, if you look month to month, we're seeing, inflation actually pick up a teeny bit. So core inflation was up 0.5% from January to February, and in January, from December to January, it was up only 0.4%. So what we're seeing right now is inflation looks like it's coming down because of those trailing months back there a year ago. But right now, it doesn't look like we're seeing inflation fall, which is why I think the Fed is between a rock and a hard place. The Fed wants inflation down at 2%. Today we're seeing core inflation at 5.5. Big gap. So simply looking at the inflation battle, we'd say, hey, the Fed has to keep raising rates for a while. And that was what the market thought before the Silicon Valley Bank collapse, when everybody thought that we were going to get a 50 basis point increase in March. But it's very clear that raising rates as fast as the Fed has been doing it has really stressed the financial markets. There are all kinds of bombs ready to blow up in the Treasury market. We've got a lot of banks with undeclared losses. Bank accounting says you don't have to declare the losses on a portfolio. You don't have to market until you sell it. And so last read from the head of the FDIC, who said FDIC insured banks had about $620 billion of undeclared losses. That's either a lot of money, it's more than I've got in my pocket at the moment, or it's not very much money since the banking system has about $23 trillion in assets, so less than 10%, but it's concentrated in some places, and you might expect there to be a blow up or two. The question is there going to be a big Wall Street bank that does something weird that makes people think about the Lehman Brothers collapse? The place I'll be watching right now is Credit Suisse. But the problem for the Fed is to fight inflation, the Fed has to raise rates. The banking system looks sufficiently fragile right now, so maybe not raising rates right now. A lot of people are saying the Fed won't raise it all in March 22nd. Next week is the Fed meeting. So if it doesn't raise rates, that means a lot of people will say, hey, the inflation battle is over, and inflation's still at 5.5%. If it does raise rates, people will go, oh my God, who knows what's going to happen in the banking system? So that's the problem. I think if you look at it in the longer term, there's a problem the Fed created by keeping rates so low for so long. And now you got to live with it because you got to get that money out of the system somehow. And one way to get it out of the system is like banks go bust. But people don't like that for obvious reasons. So the market still believes the Fed can somehow get inflation under control and not force a recession. And frankly, I don't see it. I don't see how you square the circle at this point. So that's what we're looking at right now. We'll know more about that on the 22nd, when not only do we get a decision on rates, but we also get the Fed's dot plot, which is projections for the next year or two on where they think inflation is going to go and interest rates, et cetera. That has a potential to move the market as much as the actual interest rate change itself. So watch this space for the next 10 days. Very, very, very confusing and very, very volatile. Thanks for watching. It's been Jim Juback. If you like my YouTube channel, please, or like this video, give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do the next one. You get more of my stuff, 1 or 2 posts a day, plus 3 portfolios on my free site. That's jubackpicks.com. You can get more posts every day, more like 3 or 4, plus some portfolios that include options, which are very useful at a time like this. And that's on my paid site, jubackam.com. You can find links to all that down below. Thanks very much for watching.